Hey, it's the Claims Ninja, back with another lesson in insurance warfare. Today, we're diving into why skipping gap insurance is a financial mistake you can't afford to make. Don't worry, I'll break it all down ninja style, fast, strategic, and straight to the point. Let's go. Disclaimer. Before we get started, guys, I am not an attorney, and this is not legal advice. What I share here is based on 30 years of experience in claims, litigation, mediation, and arbitrations. And as a claims manager, there are very few claims I haven't seen. My goal is to arm you with the knowledge you need to navigate the insurance battlefield like a true claims ninja. And before we dive in, guys, make sure to subscribe to Claims Ninja, where I break down the insurance and claims game so you can outmaneuver, outclaim, and outwin. Let's go. Imagine this nightmare scenario. You walk into a dealership and lay eyes on your dream car. It's sleek, loaded with fancy bells and whistles, and has everything you've ever wanted. The sticker price, $50,000. Because your credit isn't stellar, the dealer offers you financing at 16% interest rate, which is on the higher side. On top of that, you roll in extended warranties and extra dealer markups, bringing your total loan amount to $55,000. Now, here's the caveat. Even though the car itself is still worth only $50,000, you now will have a loan for $55,000. Now, stay with me because you don't really care. You love this car. It turns heads, it feels good to drive, and even though the payments are a little high, you convince yourself it's worth it. Fast forward 6 months. You've made your payments, but because of the high interest rates, most of your money has gone towards interest and not the loan balance itself. You still owe $53,500, approximately, give or take. Then disaster strikes. You get into an accident and your car is declared a total loss. The insurance company calculates the actual cash value of your car at $45,000. Since cars lose values fast, even the ones with all the extra features, they are not exempt. Here's the harsh reality. Your insurance check is $45,000, but you still owe $53,500, give or take. That leaves you stuck with the $8,500 gap. Money that has to come out of your pocket unless you have gap insurance. Now, this is where gap insurance saves the day. It covers the difference between what the insurance company pays and what you still owe. So you don't get stuck making payments on a car that's already been totaled. Without it, you're left paying thousands for a car you no longer own, all while fighting and trying to figure out how to afford another car. And that's a financial nightmare no one wants. Now, guys, this is brutal. The cold hard truth is, though, insurance companies only owe you actual cash value, commonly referred to as ACV, not what you paid for your car. So, what is ACV? ACV is what your car was worth at the moment of the accident. It's based on market depreciation, mileage, prior accidents, and similar sales in your area. Actual cash value does not equal what you owe on your loan. Insurance contracts only cover the fair market value of your car at the time of the accident or loss. They aren't responsible for bad deals made at the dealership or high interest loans. They follow state guidelines and claim valuation formulas based on industry standards. The minute you drive your car off the lot, it loses value per se, and that's what they calculate. Now, this applies to most states, guys, but there are always exceptions. So drop me a comment below and tell me where you live, and I'll let you know if your state has an anomaly to this rule. Like I said before, guys, having worked in the industry for over 30 years, I can tell you that the most contested, long, drawn out, and frustrating claims to resolve are total loss claims without gap insurance. Policyholders are blindsided, as are claimants. They assume insurance will cover everything. Lenders refuse to negotiate because they want the full balance of the loan no matter what. Adjusters get stuck in the middle, trying to explain why ACV is all they owe, and some people end up in mediation or arbitration thinking that they've been cheated. Others have their credit destroyed because they can't afford to pay off the remaining balance of their loan. Gap insurance is the only thing that prevents financial disaster in this situation. And that's why total loss claims without gap insurance can drag on for weeks and even months sometimes, with frustrated customers stuck fighting a losing battle. So let's do a final recap before we talk cost. Rather you're at fault for the accidents or not, the principle remains the same. Your insurance company or the at fault driver's insurance company will only pay the actual cash value, the ACV, of your car to your lien holder, not what you still owe on your loan. And if you're like most people without much equity in your car, that leaves a remaining balance, one that doesn't just disappear. So you either have to roll that unpaid balance into your new car loan, making your next vehicle more expensive, or carry two loans at once, paying for a car you no longer own. Yes, even if you weren't at fault, you could still end up paying thousands of dollars for an accident that you didn't cause. Now, that's what we've laid out, and let's talk numbers because this mistake can cost you big. Now, don't kill the messenger, guys. Take it up with your congressman or woman. Now, this doesn't apply to those who are fortunate enough to pay for their vehicle outright, to cash flow their vehicle, because they have full equity in that vehicle. And even when that vehicle depreciates in value, they still have equity because there's no loan on the vehicle, there's no lien holder, they own it outright. So at the worst case scenario for them, it would mean that they may not get the full amount that they paid for, but they're still going to have a lot of equity in the vehicle because it's paid for outright. And keep in mind, things that increase your loan value is a lot of bells and whistles that you purchase that you don't really need. It does not increase the value of that car or hold its value. And as we mentioned earlier, interest rates. So if you have a high interest rate, it's going to increase the bottom line and how much your loan cost is when it's all said and done. Now, typically, I won't advocate for or agree with most insurance products when it comes to giving you the upper hand. Because to be honest, insurance is designed to benefit the carrier, not the insured or policyholder. So when you actually need to file a claim, you're often met with surcharges, raised premiums, and in some cases, even a policy cancellation. Now, that's another video altogether. But when it comes to gap insurance, I'll make an exception because this is one of the few insurance products that can actually save you thousands instead of costing you more. And here's why. So let's talk about the cost breakdown of gap insurance, where to get the best deal. Purchasing gap insurance from your auto insurance carrier is the smartest and the most cost effective option, averaging between, let's say, $50 to $75 per year. Not only is it affordable, but it's also easy to cancel once your loan balance drops below your car's value. So you're not stuck paying for unnecessary coverage. Let's put it into perspective. So for $6 or $7 or $8 a month, you can protect yourself from a potential financial disaster. Now, keep in mind, guys, this is my personal as well as my professional opinion regarding gap insurance. And your second best option for gap insurance would be through either your credit union or your bank, which typically costs a one-time fee of somewhere between $500 and $800 for the life of the loan, of course, based on the value of your vehicle. So in many cases, you can even finance it and pay by the month if that's more convenient. But keep in mind that also includes some interest. Now, before you flip your Ninja cape, that breaks down to just $100 or so per year for 4 years for the peace of mind that if your car is totaled, you won't be stuck paying thousands of dollars in remaining debt. And of course, I wouldn't be the claims ninja if I didn't leave you with the 2 worst ways to purchase gap insurance. Number 1, buying gap insurance from the dealership, where the cost skyrockets to anywhere between $1,000 to $1,500 plus, depending on the vehicle's value, and in some cases, it can be even higher. Now, if the dealership rolls gap insurance into your auto loan, not only do you overpay, but you also pay interest on it, making it even more expensive in the long run. And number 2, and an absolute no-no, third-party random companies advertising unbeatable gap coverage. These are often unregulated, unreliable, and full of false promises. And when the time comes to file a claim, well, you might find out they've vanished, refused to pay, or have some other loopholes that your claim eventually is denied. So, of course, these numbers can vary by state. But one thing remains constant. Where you buy gap insurance can make the difference between saving money or getting completely ripped off. Well, now you know exactly why gap insurance can be a lifesaver and why where you buy it makes all the difference. But this is just the tip of the iceberg when it comes to insurance loopholes, fine print traps, and the tactics adjusters use to minimize payouts. And trust me, if you thought this was eye-opening, wait until you see what I'm exposing next. Next up, ever wondered what really happens when your car is in the shop after an accident? Do you actually have to rent a car, or can you keep the cash and hitch a ride? And what's the deal with the rental coverage versus loss of use? I'm breaking it all down because knowing your options could mean more money in your pocket, so don't miss it. And while there are plenty of claims and insurance channels out there, here's what makes this one different. No AI voices, guys. Yep, it's all me. Original, authentic, and relevant to today's insurance economy and the hacks that actually work. Real experience. And after 30 years in the industry, I'm pulling back the curtain so you don't get played. No fluff, just real strategies that put you in control of the claims and the insurance process. So do this now. Hit that like button if this video just saved you from a bad insurance deal. Drop a comment below if you've ever been burned by a claims or insurance issue. I want to hear your story. And don't forget to subscribe to Claims Ninja so you never miss a chance to outmaneuver, outclaim, and outwin in the insurance battlefield. And goodbye, claims warriors, and I will see you on the next video.